Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, welcome back to Accelerated Investor. Josh Cantwell here with you again, and I am really excited because we're kind of rounding third, heading home. We've been recording these podcasts and solo casts to train you up on raising and recruiting private money. I hope by now, one, we've just delivered a ton of value to you through our Accelerated Investor community. Our goal is to give and give back and give you value that's going to help you with your investing, help you with advancing your private money, your private capital, and also, allow you to build a bigger portfolio of investment opportunities and apartments and flicks and flips and stuff like that. And if you're not a real estate investor, maybe you're a passive investor, maybe you're a small investor, maybe you own an e-com company, there's definitely some tips and tricks in here that you can use inside of your other businesses to raise money and also make really smart passive investments. We are now into part number 9 of this solo cast series about how to get all the funding you need for all the deals you want and get all the capital that you need. So whether you're an active investor or a passive investor, there's definitely a lot of tips in here that you can use to make really good investments in the market. We are also on step number 5. There's 5 mini steps. So step number 1 was craft your irresistible offer. We covered that in step number 1, which was episode number 5. Then we talked about identifying your ideal investor, your ideal avatar. That was step number 2. Then we identified and said, well, where can we go to, meet up with and see and meet more of our ideal avatar? Like, where are the places that they hang out and the places they go? And then step number 4 was to craft a multi-medium marketing approach. And what would that look like for you to deploy that and to find people and then, be the top of mind reference for those people. When they think about real estate, they think of you. When they think of active investing, passive investing, fix and flips, apartments, private lending, small balance commercial, whatever it is, they think of you. This particular episode is the 5th step, episode number 9, which is follow a proven follow-up process. You can call it a sales process. You can call it a follow-up process. For me, it's a follow-up process because I don't really believe this is a sale. We're not selling anything. We're all about educating the marketplace about what we're doing, and it requires, quite a bit of follow-up. So I've taken our steps in this last step, this kind of sub-bullet points, kind of written them down. I have them here in front of me, and I'm gonna walk you through them, exactly what we do and the exact steps that they are. You can follow this word for word, literally step for step, bullet by bullet if you want, or craft your own. But to me, a proven follow-up process looks like this. Okay, let's assume that we know our ideal avatar, we have our ideal investor, we have our irresistible offer, we go to events, we meet people, we're collecting business cards, we're making relationships. Now we need to follow a proven follow-up process and really drive that home, really drive that process home. So the first thing we do, so this is sort of step 5A, if you will, follow a proven follow-up process, which is step 5. 5A is what we do is we set up a go-to webinar, go-to meeting appointment. It's in fact, we call it a fact-finding appointment. And we set up the go-to webinar, they hop on. Now, the reason why we do a go-to webinar is I've found that when I do simply a cell phone call with a potential investor, that they often miss the appointment. They skip the appointment, they forget about it. When we send them a go-to meeting link with a specific date and time, it could be a Zoom link, whatever conference line, bridge line you want to use, we send it to them. All of a sudden they think, oh, okay, this is a little bit more serious because I have a bridge line, I have a conference line with a username and a password, I can log in. Now, we don't do a screen share, but we do just a video or just audio, and I just ask them a bunch of questions. I have a specific script of questions that I ask. Starts with basic things like, hey, in case we get disconnected, what's your first name, your last name, your email, your phone number, and your physical address? Do you have a website? I collect all that data, okay? And then I jump into a series of questions which I know that I need to know per the Securities and Exchange Commission. I start asking them questions like, hey, tell me a little bit more about your investing. Are you an active investor in real estate or a passive investor? And I wait for answer. How long have you been investing in real estate as an active investor or a passive investor? Wait for answer. Okay. Now, before I go through this whole script, I've got to preface this with one thing. When they get on the phone, when the passive investor gets on the phone, they're probably expecting you to just pitch them. They're probably expecting you to say, hey, here's my offer. It's 15% return or it's 8% pref and you get this amount of equity and this amount of cash flow. Time out. Don't do that. Do not do that. One, because you have to have a prior substantial relationship with them according to the SEC. And number two, the faster you go, the less chance that they're going to invest. The faster you go, the less money they're going to invest. You need to go slow. And as you go slow, if you slow roll it, they'll invest more money, they'll invest more often because they're going to build a relationship with you, they're going to know you, like you, and trust you. So what I do, when I hop on the phone with them for the first time, they're expecting the pitch. I don't go down the pitch route at all. And what I say is, this is almost exactly what I say. I say, listen, if it's okay with you, the SEC requires us to have a prior substantial relationship before I make you an offer. Now, you know I'm in real estate. You know I recruit and raise private money. But in order for us to follow the rules and be compliant, the SEC wants me to have a prior substantial existing relationship with you before I make you an offer. So if it's okay with you, I'd like to just stay with the law and be compliant. So this first meeting with you really is about me getting to know about your investing strategy and build a relationship with you. So if it's okay with you, I've got about 10 or 12 questions that I want to ask you specifically about you, your investing history, about your family, about your background. I'm going to ask you these questions because if you decided to invest with me today and you wanted to cut me a check for $500,000, I can't even legally take it. So if it's okay with you, let's just work on our relationship. Let you just ask me questions. I'll ask you questions. I've got some specific questions that I'd like to talk to you about. And because now so time out from that little script. Now that we've removed the fact that I'm not going to make them an offer, guess what? Everybody's level of anxiety goes down. Everybody's level of is he going to pitch me? Is he going to sell me? That disappears. And we can just be open and honest now. Okay? What I found is the faster I go through this, the less money I recruit. The faster I go through it, the less money I raise, the less the relationship is there. So I would rather take my time, go slow, and build a massive relationship, an amazing relationship, because it's just funner that way anyway, and they invest more with me long term. I can provide more value. Okay? So I say that first, and then I start going into the questions. So again, tell me your first name, last name, email, phone, physical address. Great. Hey, are you married? Yep, you're married. Great. Wait for answer. How long you been married? Great. Wait for answer. And tell me a little bit more about your spouse. Are they involved in your investing decisions? Wait for answer. Do you have kids? Great. Oh, fantastic. Where do they go to school? How old are they? Wait for answer. Just normal conversation, right? All right. Then I'm going to get into some things like a little bit more specific about investing. So again, I always like to kind of open up the real estate specific conversation by saying, hey, are you an active investor or a passive investor or both? Okay, because that's going to help me understand. Do they do active fix and flips? Do they actively invest in apartments? Are they an operator? Or are they just a passive investor? Or are they both? I find a lot of people are both. Then I'm going to go into the questions of, hey, well, as a passive investor, are you more interested in principal preservation and more interested in preserving your principal with getting a lower return? Are you willing to sacrifice some of your return to preserve your principal? Or are you over here in group B, bucket B, which is you're comfortable with making investments that are a little bit more risky, a little bit more volatility, get a higher return, but might be sacrificing some of your principal. You might lose your principal from time to time. Are you more A or more B? And then I just wait for answer. And then I'll ask them using the T's, please, and C's that I learned from Kevin Harrington, from As Seen on TV and from Shark Tank, and I'll say, well, what if you could have both? Okay? And they'll be like, oh, great, how does that work? I'll be like, well, we'll get there. It works great, but we can't cover that yet. So I'm teasing just a little bit. Okay? So this fact-finding appointment, I'm going to continue asking them questions like, hey, are you accredited? Do you know what that means to be accredited? And there are a lot of people say, well, no, I don't know what that means. And then I'll explain. If you're accredited, it means you have $1 million net worth, excluding your personal residence, or you have a $300,000 annual income if you're married, with a reasonable expectation for to have a $300,000 income this year and $300,000 income for the past 2 years. Or if you're single, $200,000 annual income for the past 2 years, with a reasonable expectation for that to continue next year. Does that makes you accredited if you're any one of those three buckets? So are you accredited or not? And again, wait for answer. Then I'll ask them things like, hey, have you invested in the stock market before? Tell me about your stock market experience. Normally, I have very few people who say, yeah, I've invested in the stock market and I became a millionaire investing in stocks. That never freaking happens. I'm sorry, never happens. People say, yeah, I'm in the market. It goes up and down, up and down, up and down. It's very volatile and it makes me nervous. That's the most common response that I hear. Then I'll ask them, well, have you invested in any alternative investments? After I get past the stocks, bonds, mutual funds, typical investments, average investments, like, have you done any alternative investments? Have you invested in real estate, oil and gas, cannabis, crypto? Have you invested in private placements? Have you done anything that's what's called considered an alternate investment? And then I just wait for answer. And a lot of times this opens up a massive can of worms where they talk about lots of different things. And then I just, I let that go kind of down whatever path it goes. If they want to talk about oil and gas, they want to talk about a deal they did, they want to talk about a deal they lost money in, I just ask, oh, tell me more about that. Tell me more about that. Tell me more about that. By the way, if you want to have a great relationship with your wife, if you're a dude listening to this, make sure when you talk with your wife, ask her questions and then just say the words, hey, tell me more about that. And they'll talk and they'll talk and they'll talk and keep going and going. Tell me more about that. You know where I got that tip from? Jack Canfield. I was interviewing Jack for this podcast a couple years ago, and Jack told me that once a week he has like a whole day, not a date night, but a date day with his wife. And he's learned, I think he's in his 70s, he's got a very successful business and a successful marriage, and he just says to his wife over and over, yeah, honey, tell me more about that. Tell me more about that. I thought that was great. Just be a good listener, man. You can be a great husband by being a great listener. Women love to talk. Scientifically proven to be 4 times more than men, by the way. So anyway, we're doing this fact-finding appointment and we're asking lots of questions. So, we get down to the point where at the end, we've asked all these questions, and I'm not going to cover them all in this podcast. I've got other training programs, that we cover every single detail. The podcast and try to keep it a little bit high level, but fact-finding appointment at the end, I'll say, great, listen, I really feel great about, building a relationship with you, and I'm excited for this. I'm excited to get to know you. A lot of great things I've learned about you. Here's what I would suggest we do next. Why don't we get back on the phone next week, same time, back on GoToWebinar. Between now and then, you'll probably come up with some more questions. I'll come up with some more questions, and let's just have another sort of, fact-finding appointment, answer some frequently asked questions, and we'll take it from there. In the meantime, I'm going to shoot you an email with a couple things. I'll shoot you some links to my press kit, my website, my podcast. I'll send you a one-page bio and some links to download one of my digital books. Okay? So that's again, step 5. A is the fact-finding appointment. Step 5B is to now follow up immediately after the interview is over, the fact-finding appointment is over, and I email this stuff. I have this preset in a macro response, email it out to them. Bang. Now, a week later, again, my assistant sends out the link. same time, same place. Let's say it's Thursday at 4 o'clock. And now 5C, okay, is I'm doing basically another fact-finding appointment, building the relationship. And here I might talk about some of my past deals. I'll talk about how, I did this deal a year ago, 2 years ago. We bought it for $150,000, rehabbed it for $50,000. We're all into it for $200,000. We sold it for $300,000. And on that past deal, we paid our investor 12% interest or 15% of the profit, whichever was greater. Now that deal is not available to invest in, but that's how we structured that past deal. Okay, so now step 5C is I'm having the next go-to meeting appointment. Again, it's high level, no screen share, just a lot of questions. If they're coming to me with questions, I'm asking them additional questions. I'm asking them now things like, do they have a financial advisor? Do they have an attorney, an accountant, a lawyer, a CPA, whatever, a friend that helps them make financial decisions? Because I want to know if I'm going to bump into somebody that's going to impact their decision making. Okay. So 5C is a week later, I'm having this next fact-finding appointment. I'm saying, great, fantastic. At the end of that, same thing. Hey, the SEC requires that we have an existing substantial prior relationship. We're one step closer. Why don't we get on the phone next week, same time, same place, and meet again? And so we'll say, great, great to meet you, great to talk to you some more, build a relationship. And then I tell them, hey, step 5D, okay, is that now I'm going to mail them out physical package of stuff. Maybe if you have a book with a letter, maybe you mail them a copy of Tony Robbins' book, Unshakable, which I think is a great resource. You mail them out some swag about your company, like pens, stickers, maybe, maybe a Yeti mug, whatever, mail it out to them. So I do that between appointment number 2 and appointment number 3. Okay, then a week later, again, I try to stick with the same time, Thursday at 4 o'clock, Tuesday at 2 o'clock, same time last week, same time this week. So step 5E is that now we have our third meeting. And now this is going to be, again, at the beginning, we're going to be going through, again, frequently asked questions. We're talking to them about questions they have about real estate, questions they have about our deals, a little bit more about them. And now we have a pretty substantial relationship now. We've spent probably 3 hours on the phone with them. I know all about their family, their wife, their kids, their financial advisors, deals they've invested in the past. Now we have a really substantial relationship. Now, step number 3, this is the third meeting. This is step 5E is the pitch. And now I'm going to do a full go-to meeting with a screen share. I'm going to show my webcam and I'm going to show my PowerPoint pitch deck. Okay? So now I go through the offer, whether it's apartments, whether it's self-storage, whether it's equity in a deal, whether it's investing in your business, whether it's a private money loan, whatever that is, I'm going to walk them through the pitch deck. And that probably takes me 30 minutes. Because now I can kind of talk turkey. I have a substantial prior relationship and I can talk turkey with them. Okay? So go through that. It creates questions. Now what I tell them at the end is, look, I've gone through this whole presentation and I'm just educating them on how real estate works. We buy, properties at wholesale prices. We want to be all in at 65 to 70 cents on the dollar. If somebody invests with me, this is how the interest gets paid. This is how the equity gets paid. This is what we want the after repair value to be. I walk through a bunch of case studies. Then at the end I say, well, look, I'm not assuming that you're, interested in investing. But now that we've covered the entire full presentation, what I thought we would do is meet again next week. So now this is meeting number 4, the 4th week. And now we're going to just follow up, right? So again, I'm not asking them for any money. I'm not asking them to invest. I'm just taking their temperature. Are they interested? Is this something that they think is cool? And by now, they're going to open up. They're going to say things like, yeah, this sounds great. I've got $150,000. I've got $500,000. I got $1 million. I've got whatever. And, looks like something that might work for me. And I'll ask them more questions like, hey, are you going to invest with cash? Or you think you might invest with your self-directed IRA? Where's the money going to come from? Is there anybody else that's going to help you make this decision? That kind of thing, right? But I'm still not asking them for money. So next week comes around. Now, between meeting 3 and meeting 4, I'm going to send out the private placement memorandum, my disclosure document, my offering memorandum, whatever that looks like, with the risks, the upside, the downside, the use of proceeds, et cetera, et cetera. I'm going to send that out to them between meeting number 3 and meeting number 4. They're going to get it all. Now, the next step is we have meeting number 4. Let's say again, Thursday at 4 o'clock, same time, same place, back on go-to meeting. Now, this is essentially the close and commitment, all right? So my whole staff follows this process, close and commitment. So now it's like, okay, let me ask you a question, and this is what I consider the close. If I found a deal that looked like this is the question that I'm asking. If I found a deal that we were all in for 65, 70 cents on the dollar, you could get 12% interest or 15% of the profit. We're going to flip this house in about 4 to 8 months, could be as long as a year. If I found a deal like this and I needed $200,000 to fund the deal, is this something you're interested in? Are you interested in getting 12% interest or 15% of the profits, whichever is greater? And I'm going to wait for an answer. Okay? That's the closing commitment. Now, I don't even have a deal yet. I'm not presenting them an actual deal to invest in. This is all based on theory. It's all based on the if come. I'm going to have a deal that's coming up. Okay? And they say, yeah, if you find a deal that looks like this, or, let's say it's an apartment. You find a $10 million apartment deal and I can earn, 10% preferred return and equity and cash flow in perpetuity, I'm in. Or I've got $200,000 if you find something like that. Okay, great. Now, okay, that's meeting number 4. Now, after that, they've got the PPM. We've made them the offer. Okay, they have a general idea of a deal. Now, meeting number 5, which is the next week, same time, same place, I'm going to bring them a specific opportunity to invest in. A specific apartment, a specific rental, a specific rehab, a specific whatever. Okay? And I'm also, if I can structure it in time, I'm also going to send them copies of my note and mortgage, or I'm going to send them copies of an operating agreement that's a template. It's not official, it's a template with their name on it. So they can see and feel what it's going to look like when they invest. Okay? What does a note look like? What does a mortgage look like? What does the operating agreement look like? What does that all look like? And so after meeting number 5, they have the private placement. We have a substantial relationship. They have copies of the documents of what they would potentially look like in a template if they decide to invest. And now, meeting number 5, I'm bringing them an official deal to invest in. Because by now, I want them to be like a rabid dog. I want them to be foaming at the mouth to fund our deal. I want them foaming at the mouth to jump in. They're excited. And now we've got to start working on the rollovers, right? So if they're in a 401k, if they're in an old IRA, they've got to do the transfer, the rollover. We're going to help them get the documents filled out to roll the money over to Horizon Trust. We use Horizon Trust. If you want more information about getting a self-directed IRA account, check out horizontrust.com/SREC. And there's an opportunity to get a free strategy session there. So we work with our client to roll the money over. If it's a self-directed IRA, if it's cash, then we'll just start working with them on getting their cash ready, right? So then the last couple steps is that we put the subscription agreement. The subscription agreement is the actual investor questionnaire, and it is the investor questionnaire and their stock certificate. So we send it out to them in a DocuSign. They date stamp it, they time stamp it, they sign it digitally. Then it comes back to us. We countersign it. And then that is their proof of their investment in our deal. And then the subscription agreement is complete and they wire the money in. If the money's going to self-directed IRA, we've got to send off the subscription agreement and the direction of investment form to their self-directed IRA company. Finally, the money arrives. And then we send out a welcome packet. Okay, a welcome packet goes out to them, welcoming them to the investment. They get copies of the private placement, copies of the subscription agreement, copies of the note and mortgage or whatever whatever they invested in, the operating agreement, copies of the investment summary, copies of the financing package, a cover letter, all that stuff, and then we're done. Okay, so that many sort of steps within step number 5 is actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 steps within step number 5. Might sound like a lot, but it's only worked for me to raise 30 to 35 million bucks. And so I really feel like this is absolutely the path to go. I've tested so many different conversations, so many different ways to work with people. I've failed many times. I've pitched way too soon, way too late. It's just something you massage over the years. We've gotten really good at it. And this is where the rubber meets the road. This is how you really convince somebody to park money in your deals and invest with you. All right? Now, there's a lot there. There's a ton of meat there. So if you could, leave some comments, some questions, let us know, email the office, visit our website, let us know if you have questions around this. And we'll definitely help you out. If you'd like some more information about coaching, a lot of people, when they hear about this, are like, wow, this is a lot. But man, funding equals freedom. I need some coaching around this. I need to know how this works. I got to do this in my own business. If that's something that you feel like you need, go to joshcantwellcoaching.com. Apply there for our coaching program. We'll be happy to train you up in the exact systems we've used, to build a $100 million portfolio and recruit and raise over 30 to 35 million bucks. So I hope you enjoyed this process. We've got one more call in our series. That's coming up next.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities to start your journey toward the lifestyle you've always dreamed of. Apply for coaching at joshcantwellcoaching.com.